Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So first of all, as we go into a new week, we have seen hedge funds and money managers yet again. They've increased their overall net long positions on gold, but also on palladium as well. And we discussed this with you in detail on last week's commodity report, that do keep your eye alongside gold also on the palladium market for a potential big move in the latest week. And this played out perfectly for us at the Gold and Silver Club. In fact, we were able to bank 4,000 points on palladium just in the latest week over two positions. So of course, as many of you know, 4,000 points for every one lot contract that you would have on that market, that equates to $40,000 of profit. Of course, if you were in 10 lots on that trade, that equates to 400,000 US dollars profit in just the matter of 1 week. We are seeing that magnitude of moves in the markets right now, and of course palladium was a market that we identified with you in detail last week. And now, we mentioned it before, but each quarter several major themes they shape up in the trading landscape that present huge opportunities, and this year is no exception at all. So during the first 3 quarters of 2020, precious metals, they've outperformed every other asset class to hit fresh all-time record highs. Whilst there's no doubt that the long-term bull market for precious metals remains intact, the near term there are several high impact events on the horizon that could change the direction of prices. So as we head into the final quarter of the year, we are going to be heading into highly lucrative event-driven period with back-to-back trading opportunities. So next week we have the upcoming European Central Bank meeting. The week after that we have the FOMC statement. Subsequently, we're moving into the highly anticipated launch of the world's first COVID-19 vaccine, and of course then we have the US presidential election, which is going to dominate events that will drive market sentiment over the next 90 days. In fact, Goldman Sachs has already begun preparing their clients for what they predict could be one of the most profitable quarters ever seen. Presidential election years are some of the most profitable trading events, which only come around every 4 years, and each new president can have a significant impact on the precious metals such as gold. Of course, in 2016, when Donald Trump won the presidency, gold skyrocketed almost 10% to post its biggest one-day move in history, which also laid the foundations of the current bull market. And during Obama's first term, gold endured 4 of its worst years ever, whilst during George Bush's presidency, gold remained in a healthy bull market for 8 years. Now, looking ahead, September and October, they will set the stage for the big build-up to the November election, where the market theme will be driven by a very strategic political agenda for Donald Trump and his Democrat opponent Joe Biden, focused around how each candidate plans to defeat the virus, drive up the value of the US dollar, and lead the economy to a swift recovery from the COVID-19 pandemic. So expect higher than usual volatility over the next quarter as we enter a very exciting, very lucrative event-driven period. And we've said it before, extraordinary times, they create extraordinary opportunities, and right now we're living in unprecedented times. In these fast-moving markets, data is power. If you get too complacent in these markets, you will get crushed. You need to be very nimble in taking your profits off the table. We continue to see this range-bound price action offering opportunities to lock in profits regularly. This is where you need to be nimble, adaptable, utilize a research-driven approach to ensure that you're getting the ultimate edge to capitalize on each big move. No matter if the market trades up, down, or sideways, you want to have that accuracy and precision in banking your profits and reloading on positions as well. Technical analysis and outdated technical indicators will not work in these markets. Those days are long gone. If that's all you're relying on now to get edge in these markets, you'll end up FOMOing in or missing out on a lot of opportunities, and we see it a lot that retail traders are just getting chopped up using their technical analysis. In these fast-moving markets, data and research is power. The greater the data and market intelligence you have, the greater your edge. And you need to know how the hedge funds, the banks are positioning themselves in the markets, where they're buying, where they're selling, so you can get your timing precise. The key liquidity zones, fundamentals, macroeconomics, the seasonal cycles, the intermarket correlations, these are all going to build into your framework to make sure you get an edge in the market. So as we head into the final quarter of the year, we're going to be heading into a highly lucrative event-driven period, which is perfect for trading. If you want to successfully navigate that volatility and capitalize on the huge opportunities ahead to build substantial life-changing wealth, then you need to utilize a research-driven approach. So with that, let's move over to the charts and we'll talk you through what we're looking at as we head into a new week. Firstly, we'll start off with palladium, then we'll move over to gold and silver as well. So this was the trade setup that we identified with you last week, that you wanted to keep a very close eye on palladium. We also had the Tesla stock split as well. And as you know, palladium is utilized in Tesla car batteries. We saw an immense move at the beginning of last week on Tesla, and we also saw that correlation play out here with palladium as well. So we capitalized on this via two trades, banking 4,000 points on that breakout last week. So that sort of a magnitude of a move would normally take several weeks to accumulate on a normal market like gold or silver. In fact, some of the previous volatility that we saw last year and a move like that on palladium would take several weeks. But at the moment, we're seeing that just happen within a matter of days. You would have noted where the price action the previous week was at 2,145 and we broke out to 2,350 in the latest week. In fact, slightly above that. So that turned out to be a perfect opportunity to capitalize on that breakout to the upside. Now, we've still got our two positions on palladium here where we have locked in profits, but we're also keeping some exposure as well going into next week. So what I would like to see here is whether palladium can make a further run up, take out the recent swing highs here and the neckline which resides at the end of July, approximately around the 2,400 zone, and see if we can just have a further push, break above this neckline and start making our way up towards 2,500. So really, palladium is looking really solid here. I would still look at pullbacks as buy opportunities. So if we were to get a move back down towards the 2,200 zone and you see buying evidence at that zone, that is where I would look out for, again, opportunities to stack the position here, to reload on this market in order to capitalize on the very strong seasonal play here that you often get over September, October, November, December, January, February and March. Essentially, the next 6 months of palladium is typically very strong from a cycle and a seasonal point of view. But of course, there'll be volatility along the way, and that's where you want to make sure that you're getting the right entries. In terms of the longs versus shorts in this market right now, 77% of hedge funds and money managers are long palladium at the moment. And we've seen that steady accumulation in the last few weeks here with palladium that you can see since we put in the lows in June, that we've continued to get higher lows here, higher highs as well. And I'm looking for more continuation as we progress throughout the month of September. So with that, they're moving over to gold. So gold on Friday closed at 1,932 US dollars per ounce. You can see here where we're still getting a lot of support above the 1900 level. Even on the breakdown that we got at the beginning of August, on a closing basis, gold did not close below 1900. So all gold needs to do at the moment is continue to hold on a closing basis above 1900 US dollars per ounce, and overall it will be perceived as still a buy opportunity on the dips here. In fact, we're not even getting down to 1900s at the moment. The ideal zones recently to buy in have been approximately between 1,915 US dollars per ounce up towards that 1,925 US dollar handle. That's certainly been an optimal area to execute trades over the last 2 weeks, where we've continued to see gold get a bid just above the 1900 level, and then we've seen that rotation a couple of times now back towards 2,000 US dollars per ounce. We've seen hedge funds and money managers in the latest week, they have increased their overall net long positions in gold. And also typically as you go into the second week of September, this does tend to be more supportive to the metals. You also want to watch out for the US dollar going into next week and the gold silver ratio. The US dollar has again failed to break above the 93 handle. So as long as the US dollar stays below 93 and it continues to consolidate and be under pressure here, it provides a good environment for the metals priced in dollars to continue to rally higher. You can see also where we broke out of the trend channel just last week of the pennant formation. We've just got a very clear retest of the lower end of the channel here into Friday's non-farm payroll. We've seen a bounce into the close up 0.25% on the day. So if you have a look at silver's price action into the close on Friday, up 1.6% on the day. Silver, it still remains on a closing basis above 26 US dollars per ounce here. So that's a key level that needs to hold on a closing basis. As long as silver holds above that zone, and in fact you've got a slightly higher low at the moment, this is where I would look for more range bound price action on silver. You're getting resistance at the moment approximately around the 29 $1.29 US dollar per ounce handle. Very key support at the 26 level. So what I would look at going into next week is, again, see if silver is able to get a further bid on US dollar weakness. The gold silver ratio is still remaining close to 71 to 1 at the moment, which does favor silver to outperform gold. And what I would look at here, we have already broken out of the pennant in the latest week. We've just simply come back and retested it again to see if we will get that retrace going into next week, particularly as hedge funds and money managers, they do also continue to increase their overall net long positions. We actually already have a silver position on, which is in profit into the close here on Friday. We're going to be managing this as we go into next week alongside our gold position and our palladium position as well. Then the key is knowing the exact levels where you want to be banking profits coming out of your positions, rather than the majority of retail traders that keep FOMOing in at the top and getting crushed on those moves when they can't withstand 600-700 point moves against them when they're buying into gold when it starts to get to $2,000, only to see it come all the way back towards 1900 again, because they're taught incorrectly to trade confirmations on their charts, which are actually creating bull traps where the market makers know exactly what the retail traders are doing and they just get trapped every single time they keep FOMOing in to these markets. So if you would like to learn a research driven approach, join a community of successful traders, ditch your 100% technical analysis only approach to the markets and really start to use market intelligence to give you a further edge, then there is an opportunity for you to join us at the Gold and Silver Club. As a member of the Gold and Silver Club, you get access to our exclusive live trading room webinars. You have access to our real-time trade alerts, trading research and market insights, access to our private members academy membership site, and also support and one-to-one mentoring. For more information, please just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.